Welcome to Signal to Alpha, your essential morning market briefing. I'm Lady Muriel, cutting through the noise to deliver what moves markets today. Let's get you your alpha before the opening bell. Markets are waking up to a seismic geopolitical shift this Monday morning. Reports suggest the United States may have initiated an operation, reportedly named Operation Absolute Resolve, with unverified claims regarding the detainment of Venezuelan President Nicolás Maduro in a dramatic 3-hour military operation. This isn't just a headline. It's a market-moving event with serious implications for energy, defense, and regional stability. Let's talk numbers first. Oil sector stocks are absolutely surging. ConocoPhillips is up 7%, Chevron climbed 6%, and Exxon gained 4% in pre-market trading. Investors are pricing in potential access to Venezuela's massive oil reserves, the largest proven reserves in the world at approximately 300 billion barrels. That's 20% of global reserves. But here's the reality check. Venezuela owes over $10 billion to ConocoPhillips and over $1 billion to ExxonMobil from arbitration cases dating back to Hugo Chávez's forced contract renegotiations. The country's total foreign debt sits at roughly $150 billion, nearly 200% of its estimated $82.8 billion economy. President Trump says American companies will rebuild Venezuela's oil infrastructure, but those massive debts present substantial hurdles. The geopolitical chessboard is resetting fast. Trump invoked what he's calling the so-called Don Roe Doctrine, a modernized version of the Monroe Doctrine reasserting U.S. dominance in the Western Hemisphere. Senator Marco Rubio is vowing to eliminate Hezbollah and Iranian operations from Venezuela. This weakens Iran's already diminished regional influence and disrupts Chinese strategic footholds in Latin America. Speaking of China, they've condemned the operation as a blatant use of force. Russia's doing the same. But here's what matters for your portfolio. Trump is compartmentalizing conflicts, potentially separating Russia from China's alignment and introducing measurable accountability in foreign policy that markets can actually price. Now, shifting to domestic policy with direct market impact. The White House is postponing tariff increases on furniture, kitchen cabinets, and vanities through 2026, maintaining the current 25% rate. This follows Trump scaling back tariffs on imported foods like coffee and bananas. Economic advisor Scott Bessent says the economy will be much better off under these policies. Translation: the administration recognizes tariffs drive up consumer prices and create political damage. Affordability is the laser focus right now. On the economic calendar, we've got critical data points this week. The employment report shows 54,000 jobs added, below the 64,000 forecast. Unemployment ticked up to 4.7% from 4.6%. Hourly wages rose 0.3% monthly and 3.5% year over year. Productivity came in strong at 4.7% versus 3.3% forecast. Consumer sentiment hit 53.5, slightly above expectations. Bottom line for traders, we're seeing a White House balancing aggressive foreign policy moves with domestic affordability concerns. Energy sector volatility is high. Watch crude oil prices and how quickly reconstruction timelines materialize in Venezuela. Keep an eye on inflation data next week, especially CPI and retail sales figures. That's your signal to alpha for today. Subscribe for tomorrow's essential market briefing. Trade smart, stay informed. See you at the opening bell.